Okay, good afternoon everyone. It's Liam here, co-founder of Assets for Life. And let me just turn my volume up. Tuning in with you to the Assets for Life Property Community Facebook group. And also this is a very special episode of my podcast, Liam Ryan the Dealmaker. So really looking forward to this episode going live out on the podcast. So thanks very much for tuning in. Just waiting for the podcast, for the Facebook Live to get into people's news feed. So just give me a few moments. That will be great. I can see some people now starting to tune in. Excellent, good stuff. So this is, let me just find my notes because I've got notes for this. Just want to say hi to people tuning in. Okay, excellent. So brilliant everyone. I hope you're all good and having a wonderful weekend. So this podcast episode is called How I Raised and Recycled £550,000 from one investor. And I'm going to give you on this very special Facebook Live, the episode for Liam Ryan the Dealmaker, the full story from start to finish. So you might want to grab a pen and paper and you may want to take down some notes. And at the end of the Facebook Live, I'm going to open this up for a live Q&A session. So you can ask me any question you want about property, wealth creation, raising JV finance, social media, different property strategies. So any questions you have, jot them down and you will be able to ask me those questions at the end of this session. So where do we start? Well, I think the best place to start is right back at the beginning, before I managed to raise this £550,000 from one investor. So it's very important in property and in business that you work on your branding. You know, who you are, where you're from, what does your company stand for, what does it stand against, what's the vision of your business, what's your core values, and also what's the mission for the business. So you've got to be working on your branding in the marketplace. What services do you offer investors? What type of investment products can they invest into? What are your unique selling points is very important. And then what you need to do is you need to start putting yourself out there at networking events, social media platforms, because if you've got a business that you are really proud of, like I am of Assets for Life, and you want to make a massive difference in the world, and you want to raise joint venture finance, you want to do no money down deals, you want to help and serve and solve for people, then you need to get your message out there and you need to tell as many people as possible what it is you do. So how did I start to do this? Now, you might think this is a bit crazy, but 3 years ago, I absolutely hated Facebook and I hated social media. I had no account set up. I didn't really like the idea of going on social media. I didn't really want people knowing what I was doing. But I remember having one of my mentoring sessions with one of my mentors, and one of the first things he got me to do, he said, Liam, you've got to get yourself out there on social media. The way that we communicate with one another is completely different to 5 or 10 years ago. And through social media, you are able to get your message out there to literally thousands, hundreds of thousands, if not millions of people really quickly for free or not a lot of money at all. So that's exactly what I started to do back in 2015. I set up my social media profiles. I started to post about Assets for Life. I started to share my journey with people. I started to share my experiences. And this is the stuff that I teach my graduates to do now, people that I train in property. And as a result of doing that, I started to build up some momentum. I started to get some followers. And, some of you guys have been following me now for 3 years. Thanks very much for your loyal support and your commitment to me and my business partner, Jay. Thanks very much for tuning into this Facebook Live and also my podcast, The Dealmaker. This means a lot to me, and I just want to say thank you to everyone. And then all of a sudden, things really started to ramp up quite quickly. We started to do a lot of property deals. I started to showcase those property deals on social media. And back in August, September 2016, I was doing a Facebook Live at one of our land development deals. Now, this is a land development deal in Colchester Town Centre. We bought the piece of land. It had planning permission already granted, and the planning permission was to build 7 flats and 2 houses. And the build was like, it was really going strong, and we were really happy with the results. And I was there doing a Facebook Live. A couple of minutes later, I get a private message from a guy called Phil. And Phil put on the message something like, I remember it was something like, "Hi Liam, I've been watching you." I thought, right, okay, I got a creep here. Someone's stalking me. And then he goes on to say, "I love the work that you're doing at Assets for Life. I've got some cash. I'd like to talk about being an investor." Now, when this happens for you, what you do is the following. You stop doing what you're doing. You reply to the message immediately. So I said, "Look, hi Phil, great to hear from you. Would love to have a chat. What's your phone number?" Within a few seconds, I get a phone number back from Phil. Within a couple of minutes, I'm on the phone. I'm speaking to Phil. Now, Phil's based up in Liverpool. He said, "Look, I'm a professional property investor, me and my wife, Karen. We love property. We've been watching you now, Liam, for quite some time." And he'd actually been watching me for about a year on Facebook. And that's what people do on Facebook and social media. They'll watch you, they'll watch you, they'll watch you, and then they'll make the approach. And this is why it's really important that you have a clear message and you are consistent with your message out to your fans and your followers. So look, I said, "Phil, that all sounds amazing. You're in Liverpool. I'm in Chelmsford, Essex. Let's get something in the diary." Now, it just so happened that I was talking at a property networking event in Telford, which is probably about 3/4 of the way towards Liverpool. I said, "Look, why don't you come down to Telford? Let's have, an afternoon together. Let's have a bite to eat and see who you are, who I am, and let's see if we can get something going." So there I am a week later, driving up to Telford. I arrive at about 12 o'clock. Phil arrives at about 1:30. And for the whole afternoon, we just chat. Not once did I ask Phil how much money he's got or anything along those lines, because when you're out meeting investors, you've got to make it about the investor and not about you. What are their wants? What are their desires? Okay, this is not a one-shot deal. What you're doing in these meetings when you're having these touch points is you're building desire, you're building rapport, and you're really hanging out with that person to make sure that you truly believe you can work well together. We probably sat there for like 3 or 4 hours chatting and laughing and talking about Assets for Life, and I showed him some of the deals we're doing, and he's talked about some of the deals he's doing. And really what Phil and Karen want to do is they didn't want to really get involved with deals themselves anymore. They wanted to bring money into the deals, create some profits, create some passive income, because their ultimate goal is to move out to Australia where they can spend time with their children, okay? Now, at the end of that session, Phil looked at me and he said, "Liam, this has been a wonderful afternoon. I've got access to cash. I want to become a joint venture partner." I said, "Phil, that is absolutely fantastic. I know we're going to work really well together." I said, where do you see yourself starting out?" He said, "Look, I've got access to over £700,000. Yeah, £700,000. Now at that point, I literally could have fallen off my seat, or literally felt like running around the whole hotel like a kid at Christmas. But I didn't. I stayed calm. I stayed collective. I had a nice smile on my face. I said, that sounds absolutely amazing. Where are these funds coming from? He said, look, it's not even my money. He said, I've got a really good mate that's got £550,000, and I've got a couple of other smaller investors that between them, they've got 200,000. I said, wow, that's brilliant. What are the investors looking for? Because it's really important. Like, what do they want out the deal? He said, look, they are happy to get a fixed rate return. He said, the guy that's got 550,000, he wants 12% fixed rate return annually. And he said, my other investors that make up the additional 200,000, they will be happy with a 10% fixed rate return. He said, we don't have to worry about any type of security because they know me, like me, and trust me. He said, they want to give me the money really quickly, but I haven't got a deal to put the money into. And to be honest with you, Liam, I don't particularly want to get involved with all the nitty and gritty and do all the work. What I really want to do is team up with you guys at Assets for Life. I'll become the money man, and you guys go and find the sites and develop it out, and we will then share the profits once we pay back the investors and their fixed rate return. I said, Phil, this is brilliant. What we now need to do is go and set up our own limited company. So we set the company up, and Phil and his wife Karen became shareholders. Me and Jay, our companies became shareholders. The four of us went on as directors in the business, and the money then came into the company on very simple loan agreements, no security, for the deals that we needed doing. In the end, we didn't quite need the 750k, so we ended up with just using 550,000, which was from the one investor that wanted a 12% fixed rate return. Now, at the time, this is what happens in property from time to time, because I'm here to share with you the ups, and I'm also here to share the downs and all the stuff in between. Now, at the time, we had a deal, a development deal, literally ready to go. And unfortunately, just before exchange, the deal fell apart. And for all of you in property, you know exactly what I'm talking about, because you don't get every deal over the line. So we were like, rah, we've got this money in the bank, we're paying interest on the money, we've got to come up with a solution. Now, luckily, when you work in property, you can work with other developers, and you can JV, and you can work in collaboration. So a good friend of mine was working on a development, and I gave him a call. I said, hey, you haven't got a development deal by any chance that needs funding? He said, Liam, you know what? We've got a development deal. We've just had the funding fall out of place. We would love to JV with you. So we teamed up with an existing developer that had the deal but didn't have the money. We had the money but we didn't have the deal. So it was like a win-win situation for everyone. A company was formed, and then the money went from our limited company into the new SPV, which was actually purchasing the site and getting all the development funding. The site that we were purchasing was a commercial conversion deal in Colchester. So it was an office B1A that we were converting into 16 one-bedroom luxury flats. Very, very simple commercial conversion. The whole build process was only about 40 weeks. And literally, you can get involved with these types of deals using none of your own money, with zero experience, as long as you get the correct training, support, and accountability and mentorship. You've just got to make the decision in property. What are you going to do? Like, this is available for all of you. So look, we bought the building. We got the development funding in place. We needed to put £550,000 equity into the deal The rest of the money came from development funding. So this made this entire commercial conversion deal no money down. So we have used literally none of our own money for this project. Now look, don't get me wrong, I've spent a bit of money on petrol, I've took a few people out on some meetings, a few coffees here, a bit of lunch there, but that is it. You know, we have made all of the money from this development using none of our own money. So the build started to take place, and by July, when was this? This was February, March this year. The build was finished and we had sold all 16 flats. Like, these flats sold like hotcakes. And it's really important that when you're doing commercial conversions or land development deals, what you're going to build, you need to make sure there is a demand for what you're selling. Because if there's no demand, you're going to find it hard to sell. And if you don't sell, you can't pay the investors back, and then it delays everything and blah, blah, blah. So you need to make sure you are building what the market wants. And in Colchester, there is a massive demand for 1 and 2 bedroom apartments. And we sold these using Help to Buy. So new homeowners, they only have to come up with 5% deposit. And it was brilliant. The money started to come into the SPV. And by July, so we're only talking, you know, a few weeks ago, I think, you know, middle of start of July, all of the money from all of the sales was back in the bank account. So what did we do? Well, first of all, we've got to pay back the development funding company. So they got their money back. Then we have to pay back the investor. So the investor that paid in £550,000, he got his money back with a 12% interest. What's 12% on 550? It's probably about 100k, there or thereabouts. So the investor was like really happy. You know, he made circa £100,000 profit by investing his £550,000 into the deal. Now, this is the best thing about it. The investor got his money back. What do you think the investor wanted to do? Well, he certainly didn't want to keep it in his bank account. The investor has nowhere else to place that money that's going to give him a 12% fixed rate return. We've just made him circa £100,000 profit over an 18-month period. So the investor was absolutely made up, and he says, you know what? Have you got another deal for me? And you know what our answer was? Of course we have. And a couple of weeks ago, that £550,000 has come back in to the joint limited company that we have with Phil and Karen. And we have now used that money into another investment that is ultimately going to kick out a high percentage return. This is the wonderful thing about raising joint venture finance: keeping your investor happy, paying the investor back on time. You can then recycle that cash as many times as possible in deal after deal after deal. Now, you might be thinking, Liam, that sounds brilliant. How much money did we make on the deal? Okay, good question. The commercial conversion net profit pre-tax, I don't know the exact figure because we're just working a few bits and pieces out with the accountants, but we're looking at circa £500,000. £500,000, ladies and gentlemen, from one property deal using none of my own money. Now, let me make something very clear. That £500,000 profit is not all my money. Why is it not all my money? Well, I wasn't the only person involved in the deal. We've got to split that with the joint developer, so they get their bit. And then our half of the profit needs to be split between me and my business partner, Jay, and also our business partner, Phil and Karen. So the profit that I'll make personally from that is still a whopping amount of money. And then actually my return on time employed is very, very, very high. Okay, and that's what you've got to look at in property deals, is return on time employed. And this is one of the great reasons why we love doing joint ventures, why we love raising funding from people, because we can have multiple deals happening at any one time. I'd rather make a little bit of money from this one, a little bit of money from this one, a little bit of money from this one, because ultimately you do less and you earn more cash. And that's what this is about. I didn't get into property. I don't know about you. I didn't get into property to have a full-time job. I got into property for lifestyle, for freedom, for choice, to be my own boss, to do what I want, when I want, how I want. You know, have a think about that. What is it you want? I don't want to be slogging my guts off for 15, 16 hours a day on one development for 18 months. I want to focus on the high key result areas. I want to focus on the areas that I'm good at and the things that I enjoy. And by doing so, you make a lot more money. And this is why, if you look at all of us successful property investors, developers, millionaires, we've got one thing in common: collaboration and joint ventures, using other people's money and working together to make things happen. So that really, ladies and gentlemen, is how I raised £550,000 from one investor. We have now recycled that cash. And you know what? We recycle almost every investor's money that we have. You know, we've had many, many investors over the last 3 years. We've done lots of property deals. And the reality is, the investors, when you pay the money back, they want to give it back to you immediately. Like they don't want it sitting in their bank account, because where else can they go and make 8, 10, 12% fixed rate return in something relatively safe that's going to give them a really, really big payout? So I just want to end with this before I open it up to the live Q&A on this recording of the Dealmaker podcast. So 7 things to remember. You may want to write these down. Number 1, branding and getting your message out there to your audience is essential when raising joint venture finance. What's your company name? What are your colors? What's your vision? What's your values? What's your mission? What do you stand for? What do you stand against? What's your unique selling points? What do you offer that no one else offers? Number 2, I want you to remember there isn't a shortage of cash available from investors. Because I know some of you are watching this right now, or you're listening to this on the podcast, and you're thinking, where am I going to find these people? Like, how do I physically go and get the money? There isn't a shortage of cash out there. There is literally trillions and trillions of pounds in the world. And once you work on your branding and your message and you put yourself out there, you will be in a position where you have this endless supply of investor funds. Point number 3. It's not about you, it's about the investor. So you've got to listen to what the investor wants and give them what they need. Now, it's got to be a win-win. So it can't be like a win for the investor and a lose for you. It's got to be a win-win. But listen to what they need, because, you know, they might be really happy with a 6 or 8% fixed rate return. They may not want to have like a 30, 40, 50% share in equity. Find out where they are, where they want to go. Find out what their needs, wants and desires are, and then just bring something to them that works. Number 4, when you're doing joint ventures, make sure, please make sure you have the correct legal paperwork in place. Do not do anything on a handshake. So if you're raising money through loan agreements, make sure you've got a loan agreement in place. Make sure if you're doing anything with, like with Phil and Karen, make sure that you're on the company correctly. Make sure there's shareholders agreements in place. Make sure there's joint venture agreements in place. Spend the time at the beginning doing all of the boring stuff, but the most important stuff is making sure that you, your business partners and your investors are fully protected and everyone understands the deal. Communication here is super important, ladies and gentlemen. Point number 5, keep the investor in the loop. And that was Phil's job, actually, as one of our business partners. It was his job to make sure the investor was kept entertained, to make sure the investor was kept up to date. building that rapport with the investor over those 18 months made it even easier for the investor to put back in the cash. Point number 6, pay investors back when you say you're going to pay them back. Like, do not be late paying the investors. Now, I'm not saying if you're late, you're going to ruin the relationship, but you know, I'm a man of my word, and when I shake your hand and I look you in the eye, like what I say I'm going to do, I do my absolute best to make sure. So I don't like letting people down. I certainly don't like letting investors down. So make sure you're paying back at the same time. And point number 7, make sure you've got a place to put the investors' funds when they give you the money back. Because what you don't want to do is be in a position where you say to the investor, oh look, yeah, it's been great working with you for the last 18 months. I really would like your £550,000 back, but I haven't got a deal to put it into for 6 months. What do you think is going to happen to that investor? They're going to go somewhere else. So make sure that you've got a good pipeline of deals or other investment products where you can put your investor funds. So they're the 7 points to remember. I've given you the complete story from start to finish, how we raised that £550,000. So I really hope that you have found this property training really useful. It's giving you some inspiration and motivation to think that you can do this as well. And look, this is the reality. Let me share a little secret with you. 3 years ago, when I decided to become a full-time professional property investor, bearing in mind my first time round I lost a lot of money. So when I came back into this marketplace and invested thousands of pounds in my education, met who is now my business partner, Jay Munoz, there was an element of skepticism, and I was thinking, no freaking way am I going to raise joint venture finance. Like, who's going to give me money? And the reality is, you follow my system, the No Money Down Blueprint, which is my 6-step system. The reality is, everybody out there watching this Facebook broadcast, listening to this on the Dealmaker podcast, I don't care who you are, where you're from, what you look like, what you sound like, if you've just arrived in the UK, what your past experience is, what you do for a living, I'm telling you now, you can all build a multi-million pound property empire using none of your own money, because I'm living proof. And if I can do this, I tell you now, you can all do this 100%. How can you learn to do this, getting the right training? You need to attend our up and coming events. It's a brand new event. It's 2 days. It's called the Property and Business Summit, 15th and 16th of September 2018. It's in central London. Somewhere here on the post you will find the link. And over those 2 days, I'm going to be sharing with you my entire system to raising money. We're going to be looking at the property portfolio matrix. We're going to show you how you can do this part-time with no experience using other people's money. I'm going to take you on a journey which is going to blow your mind. I'm going to show you sales, marketing, negotiating, business, how to start, scale, systemize. I'm going to introduce you to different asset classes and how you can make multiple streams of income. So if you've not yet booked on, we have a very, very limited number of complimentary free tickets. So make sure you click the link below or visit the website, which is, if you're listening to this on the podcast, then visit the website. Let's have a look what it is. I'm going to open this up now for a Q&A session, okay? So if you've got your questions ready. Let's have a quick look here. Okay, great. So if you're listening on the podcast, go to www.thepropertyandbusinesssummit.co.uk. And if you're tuning in on this podcast live, then click the link below and get yourself registered. So, ladies and gentlemen, thanks for tuning in. I'm now going to open this up to a live Q&A session. You can ask me any question about anything that I've just talked about or share your journey. I'm now making myself available for you. So we've got Keith Robinson. Hiya, Keith. He's live now. Keith is saying, can you start with bigger deals like commercial conversions and still get investors even if you haven't built a social media following because you haven't got any deals experience behind you? Would it be best to start with smaller projects or even come across a bigger project? What would you go for? Okay, that's a great question, Keith. Now, I get asked this question a lot. When do I start building my social media following? And the thing is, you may not be in a position today that you've got a deal and you need money, but I guarantee you 6, 8, 12, 16, 20 weeks from now, you will have like an amazing property deal and you're going to need it funded. That is not the time to start building your presence, because if you just pop up on social media and go, hi everyone, I've got this deal, like I need some money, people are going to go, who's Keith Robinson? So the best time to start building your presence on social media is today. You can tell people what you're doing. You can tell people when you go to networking events. You can share your experience. You can tell people what you're reading on audio. You can share some of your ups and downs in life in general. The key thing about social media, it's not always like your content hasn't got to be amazing, but you have to be consistent with what you're doing. So now is the time. Now, I'm not saying that you have to be on social media to raise money. Like Keith, you can go to a networking event tomorrow. You might bump into someone and hit a pot of gold. So, you know, get yourself to networking events. But what I'm saying is, in order to raise money, you have to be in contact with people somewhere. That's either friends and family members, people that live in your house, people on social media, people at networking events. Talk to people in Tesco's. Okay, now I'm on holiday at the moment in Marbella. Guess what I do round the swimming pool when I get speaking to the other dads? Yeah, I talk business and property. Guess what I do? I generate leads. Okay, now some of those leads will convert into investors and some of them won't. Now, what I'd also recommend, Keith, is that, and this is to everyone listening in, I have trained people that have literally started with commercial conversions. Like they've never done a single let, they've never done a multi-let, they've not done lease options. They have literally made the decision to start doing commercial conversions as their first deal. Now, when you do that, it's absolutely fine to do that because you're going to get the training through me and, you know, my business partner and other people in the academy and through, you know, our trainings. What's important and what you will need to do is you'll need to JV with an existing developer, because it may be really difficult to get development funding for your first development and you've not got any experience as a developer. So guess who my first partner was, and he's still my business partner, Jay Munoz. You know, Jay Munoz has got loads of development experience, and he was in the deal with me when we went and got development funding. So hopefully that's helped you. We've got Stuart Hunter online. Hiya, Stuart. He says, hey Liam, great content as always. We're currently working on a deal where we are trying to secure a mortgage on a deal. The vendor has imposed a 14-day deadline and the mortgage, and we're concerned they will not offer in time. My question is, where are the best places to find angel funds? Okay, Stuart, so yeah, you're up against the time frame then. You know, 14 days is a bit harsh, to be honest with you. You've got to question that a little bit. Are they really going to pull out if you haven't got the mortgage in place in 14 days? Like maybe they will, so you've got to take them seriously. But you know what? They then have to start the process all again from the beginning. They've got to put it up on the market. They've got to have viewings. They've got to get offers. Those offers have got to go in. Then the searches have to be done. Blah, 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 blah. It's a process which can take many weeks, if not months, buying a property. So where can you find angel funds? Well, you can get yourself to angel meetings in London. So if you type into Google, angel investors London, then that's a really, really good place to find angel meetings, and you can turn up and you can pitch your business. If you need other funds quickly, then you can post on social media, you know, telling people what you're doing. You can't just go on social media and say, hey, I've got this deal, I need this amount of money, because there's FCA rules and regulations around that stuff. But there's certain ways in which you can say it where you're not going to break those rules and regulations. So again, you know, start, you know, get into some networking events, Stuart. Also, maybe bridging is an option for you. So go and speak to a broker and see if you can get some bridging in quickly. You're going to pay more money for the bridge finance, but it could be a really, really good answer for you. Stuart Hunter again, with Facebook and Insta, would you pay to boost your posts? Yes, Stuart, we do boost some of our posts in Facebook. So we do boost some stuff on all our social media traffic. We don't boost everything, but yes, some of our stuff is sponsored, and that's a great way of getting your message out there. Like some of my videos now have had like 1.5, 2 million views. Now some of that's paid and some of that's organic, but you know, I can get a view on one of my videos through Facebook for about like less than half a penny a view. Like that is so cheap. So yes, we do boost them. So, Carlotta, I think that's correct. If I've not quite read your name right, apologies. That's the Essex boy in me. Carlotta is saying, Liam, I'm currently on the Property Bootcamp in October. I've created a business page and I've started thinking of a business name. What advice would you give me prior to me starting the Property Bootcamp training? Okay, great. So, you're with us in October on the Property Millionaires Bootcamp. Really looking forward to having you there. It is a life-changing 3-day event. The best property and business training in the world, and you know, so many of our graduates are just getting the most amazing results, and I'm very confident you're going to be one of our next superstars. So well done for making that commitment. Now, you may have remembered, Carlotta, that you would have been given a pen drive called the Assets for Life Suite. And on that pen drive, there are some documents. There's a JV document. There are also some spreadsheets to look at. There's a whole load of different bits and pieces on the pen drive. So go through the pen drive. What I'd like you to do as well is get onto my YouTube channel and watch my videos as much as you can on YouTube, because again, there's loads of great content on that. And what I'd also suggest that you do, Carlotta, is start thinking about what's important to you in property. Do you want a cash flow strategy where you can replace your income relatively quickly to quit your day job? Or do you like the idea of doing developments and maybe building some houses or converting an office into apartments? Try and have a think about what strategy you want to focus on. Do you want to do rent to rent? Do you want to use investor funds to buy multi-lets? Do you like the idea of doing small flips? Because unless, and this is what you've got to do, and I see so many people in property trying to focus on like 4 or 5 strategies at once, like it blows your mind. You've got to have 2 strategies. 80% of your time is spent on your primary strategy and 20% is spent on your secondary strategy. Get yourself on Rightmove, Carlotta, and have a look at property deals. Get yourself on spareroom.com, and I would 100% make sure that you attend the Property and Business Summit in September for 2 days. That's going to be a great networking opportunity for you, and get yourself to other property and business networking events. Okay, these are great questions. Keep them coming. Eddie's online. Hi, Eddie. How do you pull out of a property? How do you pull money out of a property to start a new deal, remortgaging? I keep getting you need 3 years wage slips for self-employed. Well, there's other ways of getting mortgages, Eddie. Some mortgage companies will give you a mortgage regardless of your income. Okay, so there's one or two that will do that regardless of your income. Yes, some of them will want you to have 3 years wage slips. If you can't get a mortgage initially, well, someone else could go and get the mortgage for you and be your mortgage host, and you could be a shareholder in the company but not a director. So when I first moved back to the UK in 2014, I didn't have what I needed to get a mortgage. So I set up a company with my business partner, Jay. I was a shareholder, he was a director, and because he was the director, he went and got the mortgage. So there's ways round it. Also, Eddie, there's strategies you can do in property that you require no mortgage, okay? You can do rent-to-rent deals. You can also do development deals where you're not getting a mortgage, you are getting development funding. And again, development funders, they don't always go on your salary. So there are ways around doing this. How do you pull out the money? Well, if you are buying the property, adding value, and then you are remortgaging or refinancing to keep the asset and then pull out the initial investment capital, then you need to have enough uplift in the value to pull out all of the money. Because when you refinance, you're probably going to refinance on a 75-80% loan to value mortgage. So you have to have an uplift in order to get the money out. Now, you're not going to get all of the money out in all of your deals. Like, it just doesn't happen. Sometimes you're going to need to leave money in, but you can get that money back, say, over a 1, 2 or 3 year period through the rental income that is going to be produced from the asset. Now, if you're buying and selling, you're trading property, well, in order to get your money out, you just need to make sure you make a profit. And as long as you make the profit, you get your initial capital back, and then you've got a lump sum at the end. Okay, brilliant. People are just commenting. Okay, Tom Wood. Hiya, Tom. He's just said, sorry, mate. I've only just joined the video. I want to come to one of your courses. Are the courses free or paid courses? And if so, what are the different courses? Yes, we do lots of different trainings, Tom. We do online trainings. You can do stuff on my YouTube. But the next course that we have coming up is the Property and Business Summit. It's the 15th and 16th of September. It's in central London. And this 2-day property and business course at the moment is complimentary. Okay, so you can get a free ticket now, but you're going to have to click the link in this news feed. Or if you're listening on the podcast, then you need to go to www.thepropertyandbusinesssummit.co.uk. We also have paid events, Tom, which are more exclusive. We've got the Property Millionaires Bootcamp. That's a paid event. We've got things like the Assets for Life Academy. That's not an event. That is a 12-month mastermind and mentorship program. But my biggest recommendation for you, Tom, first is to attend the Property and Business Summit. Come and spend 2 days with us, complimentary. Hang out with me, hang out with my business partner. We've got some world-class speakers attending the 2 days as well. And by attending there, Tom, you'll get as much as we can give you over the 2 days. So that will really give you a boost of content and energy and inspiration and thinking outside the box. And then if you like us, which I hope you will do, and you think, yeah, you know what? I like this Liam, I just want to copy what he does and make the money that he makes, then of course there's opportunities for you to come and do more advanced training with us, okay? We've got William online. So hi William. William is asking, we've seen the new regulations that have been passed for HMOs. How is this going to affect your business? Well, if anything, it's had a really positive effect because we now need to have a license for all our HMOs, you know, so all of our HMOs, because all of our HMOs are 5 bedrooms or more. Now, before, you only needed a license if you were on 3 floors and also had over, you know, if you had a HMO over 3 floors. So now, this is really good because it's going to get rid of a load of the rogue landlords. Everything we've done over the last 3 years, even on some of our HMOs that didn't need a HMO license, we always done them to HMO license standard anyway. So we're not in the business of cutting corners. We believe in doing things right at the beginning. We believe investing the right money in the right people and also staying legal. So our HMOs, to be fair, William, are running absolutely great at the moment. Most of our HMOs are kicking out between £700 and £2,000 net profit per month. So again, ask yourself the question, how many of those do you need to create financial freedom for you and your family, to live the lifestyle that you want to live, to do the things that you want to do? The reality is you might only need 2 or 3 of them, and that will have a dramatic positive impact on your life. So yes, bring on the rules and regulations. We like rules and regulations. This is not putting us off multi-lets at all. If anything, it's making the whole market for multi-lets a lot safer place, and it's going to make HMOs more appealing. Super, super, super. So guys, look, I'm making myself available. It's now 6:45 where you are, 7:45 where I am. I've still got a little bit more time on this live episode of the Dealmaker podcast. So this is, I've only got a few more minutes. So if you've got any questions, comments, shares about anything, literally don't hold back. Type them in the questions box right now, and I'll answer them for you. Flies everywhere, eh? It's hot. Okay, good stuff. Look, this has been a really, really good episode, live episode of the Dealmaker podcast. If you've not yet subscribed to my podcast, all of you watching this live, then get yourself on SoundCloud or Stitcher or the App Store podcasts. Type in Liam Ryan the Dealmaker, subscribe to my podcast. There's a number of episodes on there giving you great content around property. For all of you that have been tuning in on this Facebook Live, thank you very much for being part of this. It means a lot to me. All of you that's coming to the Property and Business Summit in September, which it should be all of you, then basically, look forward to seeing you in September. Stay tuned across all of my social media platforms for more content. Okay, couple of last minute questions have come in. Excellent. Tom is asking, how much is the academy? Well, we've got different levels, Tom, for different levels. We've got different packages, so it depends on what package you want. But if you want to know more about that, Tom, if you can send me a private message with your name, phone number and email, me or one of the team can give you a private phone call and we can talk you through our academy and our options. But the best thing to do is to get yourself to the Property and Business Summit, okay? Because we like people to spend time with us before you join us on advanced trainings, yeah? So come and hang out with us, but do send me your phone number, email and name. I know your name, but your phone number and email, and we'll be in contact. Keith Robinson, should I get some business cards for the 2-day event? Yes. 100% Keith. You don't have to invest a lot of money on this at the moment, and don't worry too much about your branding. Like, it hasn't got to be perfect, but yes, get some business cards done, get on Vistaprint. You can get like 3 million cards for about 3p. It's really cheap. Have them for the business event, 100%. If you don't have a business name, so Carlotta is asking, if you don't have a business name, what about my business card? Well, you can literally on Vistaprint get a plain white business card, or put some, get a nice design on there, and you can just have your name and call yourself a property investor. Then just put your mobile, your email, and again, your full name, okay? So again, doesn't have to be anything fancy at this time. Just get something done so you are prepared when you go out networking. Okay, super. Look, guys, I've got to go now because I've got to get ready. Me, my wife Holly, and little Ivy, we've got dinner tonight at a really nice restaurant down on the beach in San Pedro, which is just next to Marbella. I'm still out here for 3 weeks, so really having a great time, enjoying the mobile lifestyle. You know, I love merging my passion with my profession. I love business, I love property, I love to help people like you guys out. So guys, thank you so much for tuning in and making this evening very special. Enjoy the rest of your weekend, and I will see you very, very soon. Hey, right, little Ivy's come, gotta go, bye.